We started the quarter close to our strategic asset mix, and as the quarter progressed, we started to add risk back into our portfolio. We did that because we were starting to see some positivity on the vaccine front, and we had the US elections behind us. Now, there's no doubt there are still some risks in Q4 and possibly into Q1 of 2021, but we think those might be short-lived. As such, we've balanced our portfolio to manage against the short-term risks, but still looking for those opportunistic plays longer term. So we have a barbells type strategy. To protect that short-term risk, we still have a slight overweight to the US equity side with a focus on active management. And then for the opportunistic side, we've been tilting our portfolios more and more towards those value segments. Things like industrials, materials, financials, and small and mid-cap stocks. We think those will have a good rebound back as the rotation occurs from growth to value. On the regional side, we're likely to increase more and more towards our Canadian, international, and emerging market areas. We think those areas might play a little catch-up to the US market and the strength that the US had in 2020. And then finally, on the bond side, we remain close to our strategic mix, though we do still have a slight tilt towards the credit side of it, given the higher yields. Though we have a strong belief that growth remains a good long-term play, we think 2021 will be more about value than growth. As such, we expect a pullback in some of those names, particularly the work-from-home trade. If you think about that, 2020 was great for those names under a pandemic scenario, but may not be as strong under a reopening scenario. Given the vaccine and the positivity that we're seeing coming through there, that really is a game changer, and that probably means that some of those trades tied to the reopening of the economy will do much better in 2021. And some of that movement might be sharp and sudden, so we don't want to miss out on those opportunities. As such, we've been rotating out of some of those growth names and into some of the value plays. The hope here is that we don't get a head fake like we've seen in 2020 many times on the value side, but that this value trade is finally here and for real. All year we've been quite active in the completion fund, either looking for ways to protect the portfolio or looking for ways to add incremental return to the portfolios. In Q4, we're mainly selling calls and put options on the value segment, taking advantage of any higher volatility we might be getting and generating additional income for the portfolios. Some of those value plays were tied to areas that we wanted to be owners of and at prices that we would be comfortable if we had a pullback in the markets. That was a highly profitable strategy in Q4 and something that we expect to continue on in Q1 of 2021. Now, near the end of the quarter, we did start to add a few hedges into the portfolio, really to protect against the uncertainty on the US elections, particularly in Georgia, and of course, any additional negativity we might get on the virus front or any slowdown that we might get on the vaccine front as well.